Hello, guys. Welcome to this section of another training, of another teaching about the advanced market structure. Okay, so if you are watching this video right now, I want you to go back and watch that advanced market structure video. Watch the part one, watch the part two, and I promise you that this is all you need as a trader. This is all you need as a forex trader. See, if you can understand this strategy, this trading model, you will never have problem becoming profitable as a trader anymore. The other thing you'll be needing is psychology. So if this is your first time of coming across this video, you are welcome. Before you watch this video, don't forget to like this video, subscribe so that more and more people will see this video and learn something deep from it. Okay, so if you are just watching this video and you have not watched the part one, the first video where I drop about market structure, I want you to go back now and watch that video because it's really important. Okay, I really need you to watch that video because there are a lot of things you need to understand before coming here. So today's topic is called liquidity. Liquidity is the continuation from the market structure. After liquidity, we are going to be treating POI. So in trading, you should know that whenever you see the word liquidity, you should know that liquidity is money. Okay, liquidity, liquidity, liquidity simply means money. Okay, that's what liquidity means. Okay, and why is it that the advanced market structure work so well with structure and liquidity? It's simply because the market does not move if there are no liquidity. Okay, so liquidity must be in the market. Liquidity must be in the market. It is the liquidity that is in the market that makes the market to move. Because if you are driving a car, okay, to, let's say, to Lagos, for those of you that are in Nigeria, you cannot drive a car from Abuja to Lagos without branching somewhere to relax. Okay, so the place you branch to relax, to buy fuel, to exercise your leg, to feel free, okay, and then for you to continue simply means, and to buy fuel. Okay, if you don't have any fuel in your car, no matter how good the car is, no matter how nice the car is, it is not going to move from there. Why? Because there is no fuel. So in this market, in the forex market, what makes the market to move is called liquidity, and liquidity simply means money. If people are not trading in the market, if there are no money in the market, you will see that the market will be stagnant. Candles are not going to be opening and closing. Okay, so that is what liquidity is all about. And from the advanced market structure, okay, I give you guys 5 rules. So that is why I say you should watch the first video where I talk about market structure. Okay, and in this video today, I'm going to be explaining the two type of liquidity that we trade in the advanced market structure. Okay, we are going to explain the two type of liquidity that we trade and what they are used for. Okay, now the first liquidity, well, let me write it down. Two type of liquidity on the advanced market structure. Two type of liquidity that we trade in the advanced market liquidity. Okay, two types of liquidity. All right. One, we have the transactional liquidity, and I'm going to also explain what this liquidity that are used for. Okay. Secondly, we have structural liquidity, and I'm also going to be showing you in the chart structural liquidity. Is my spelling correct? All right. Structural liquidity. Okay. So one, we have a transactional liquidity. All right. And secondly, we have structural liquidity. Now, what are this liquidity used for? Okay. So I want you to write something down. Okay. This liquidity, right, I'm going to be showing you in the chart what the liquidity simply means. All right. So let me just quickly draw it and show you. let me use a is it by structure. Okay, let me use, let's say, it's a structure, and show you what this liquidity are used for, how you can easily identify them in the market. Okay, all right, so I'm going to mark this. See, if you are watching this video, it's very important to watch the advanced market structure. The first video where I drop, you go back and watch it so that you have a clearer understanding of this place. So this is liquidity best explained in any form. This is the best explanation of liquidity you are going to be getting. Okay, so this is going to be our POI. Alright, it's going to be our POI. Now, from this video, you will see that we have this part, this one. This is where we call one, and this part, how did they work clean? Okay, one, enter, and this is another liquidity. Oh, one and two. Okay, so now number one, this is, from the five rules of the advanced market structure, where we have a first break, a second break, sweep of liquidity, protected high in this place. Okay, 50% retracement in this place, and then price break structure to the opposite direction. And you remember, price will still come back. We're still going to do another movement, movement, and then come back to this POI, take out this liquidity, okay, and then set to the opposite direction. Okay, set to the opposite direction. So now this one, this one is called transactional liquidity, right? This one is called transactional liquidity. This one is called transactional liquidity. And what is transactional liquidity? This transactional liquidity that is here, it is used for correction in the market. So transactional liquidity is used for correction, right? So this liquidity right here, this liquidity right here, liquidity right here is used for what? It's used for market correction. Okay, why this number two? It is called structural liquidity. Structural liquidity. Okay, it must not be in the same line with this structural transactional liquidity. So this liquidity is called structural liquidity. And what is it used for? Now let me explain what it is used for. Sorry. Oh, no. Everything wipe out. Okay, let me just real quick. Let me just draw the chart. Mm, sorry for the interruption, guys. Just having. Okay, let's do this. The reason I'm able to draw this fast is because of if you watch the first video where I talk about market structure, this shouldn't be difficult. You should be able to identify it on chart. And I'm going to be doing a lot of examples. Also, when I start doing my live streaming, okay, you'll be understanding a whole lot about this whole thing. So I want you to exercise patience. If you are here, please pay close attention, and you're not here for entertainment. So pay attention and learn, please. Pay attention and learn. Pay attention and learn. Right? This is what you need. Okay. This is one. This is two. This is structural transactional liquidity. Structural liquidity. And what did I say? Structural liquidity. Transactional liquidity is used for again. Transactional liquidity is used for transactional liquidity is used for market correction. Just have it at the back of your brain. Okay, just have this at the back of your brain. Why number two? We have what? Structural liquidity. And what is structural liquidity used for? Is used for continuation. And I'm going to explain why it is used for continuation. It's used for continuation. Okay. Now, this is transactional liquidity. The five rules of the advanced market structure explain how we get this liquidity. They explain how we get this our protected high here. Okay. This is the structure for a sell. It explains how we get this break. It explains how we get this retracement and this break of structure to the opposite direction, and why price will still need to come back into this place and sell off. Okay, now let me explain this. Transactional liquidity is used for this correction where price break structure and created the protected high. Okay, used for this correction for this advanced market structure. Okay, and structural liquidity. What why it is used for continuation is because this is your structural liquidity. It is used for continuation. Why? Because after price breaks structure to this opposite direction, okay, it's going to move, gather liquidity, gather liquidity, gather liquidity. All right, make all those move. All those move does not concern you. This liquidity that is here already, which is the money that is made for the market. Okay, price now is going to come into this place, this money, right? Because why? Advanced market structure work with liquidity. And if there's no liquidity in the market is not going to move. So all this move the market is making is gathering liquidity to come and be taken out at this point. And why when price move and then come into this point, it's going to sell off. Automatically it's going to sell off. That is how the advanced market structure work. And that is what you should understand about the advanced market structure. Okay, price is going to move, and then come into this part and take out this liquidity. That is why this place is your transactional liquidity. It is your structural liquidity. Okay, the 50% retracement to the protected high is called the structural liquidity. So price is going to come back into this zone and then take this liquidity and continue to the opposite direction. That is why structural liquidity is used for continuation. If there is no structural liquidity here, this continuous move is not going to be here. I believe you understand what the structural liquidity is all about. Okay, so this is all you have to know. This is all you have to understand about liquidity when it comes to the advanced market structure. Okay, so have this at the back of your brain, understand it. See, I want you to know, I want you to have the pictures of this pattern in your head because this is everything. Once you have the picture of the pattern, okay, and then you this pattern, right? Once you have the picture of this pattern in your head, okay, then you understand the five rules of the advanced market structure. If you can identify it in the market, your problem is 50% solved because you still need to understand what they call top down analysis, supply and demand, confirmation entry, and that is all you need. Okay, so in my next video, I'm going to be explaining liquidity using chart. Okay, I'm going to be showing you live on chart and how it's playing out. Okay, so understand what transactional liquidity is all about, understand structural liquidity, where it is based from. This is your first break of structure. You have your first break of structure, second break of structure. You see that the first sweep of liquidity, where the first sweep liquidity is your structural transactional liquidity, and the second place that price created liquidity to be taken out is your structural liquidity because it is for continuation. Price need to still take out that liquidity, just like the way price take out this liquidity, continue to the opposite direction. Prices must come back, take out this liquidity, and also continue to the opposite direction. So in my next video, I'm going to be explaining liquidity using the chart diagram. I believe you learned something from this. And if you watch this video to this point, don't forget to subscribe, okay? If you have any question, drop it in the comment section and I'm going to be explaining them for you bit by bit. I believe you learned something from this video. See you in my next video. Bye guys.